Hi everyone. New month and a amazing start. Last month was tough. Definitely in the April month was tough, but this month amazing start. Of course, everybody would be under pressure, if not panic, that what might happen like after seeing this kind of a move. And when it was consolidating here, the pressure was building for sure because as I mentioned last week that we would like price to be consolidating in upper region, not the lower. If there it is lower, there it can be a downside pressure. The same time I mentioned that risk level is far below, and there are interim resistance which are supports, I would say, which are previous resistance, and that's how it works. You know that prior resistance act as support, and what we see is the R7 was the prior support, sorry, resistance turn into a support, and it helped us. Another simple way to look at from the trend line point of view that this is particularly a channel kind of, another channel which is descending channel within this consolidation. And now you can see that it's right on the upper side. So in channel, this is called channel trend line, and upper line is called channel line. So we can say that this is hitting the upper, I mean, channel line, and then the trend line, channel line, then the trend line, and now it is back to the channel line. So what we would like to see is this is a nice symmetry, maybe some consolidation here, and then and if the price could get out of this channel, that's what we would like to see. Ultimately 69K is the orange level. I mentioned, I think even if we get 67,500, that is good enough in my point of view. 69,000 is more like conservative level. If we get a daily close on this one, that will be good enough. So I think when I look at the big picture, I mean, zoom out, this trend line was broken earlier, and then this channel started building up, and this particular move confirmed that after this is more like a second touch. When you go higher time frame, you will see that um, there's a clean downside channel, descending channel, right? And then overall consolidating, and then this is going to, the white line is going to play some role for sure. So I'll just extend it for future price action. So I would say this breakout is actually delayed. And this is what I explained, that each time there is downside move, depends on how deep it goes, there's always delay. So time-wise, you can always shift the timeline because that tuning is required. That is not in someone's hand. It is totally determined by market. And that is not changing the, I would say, analysis, so to speak, because in TA, we try to estimate the time, but the focus is always on the key level. I think calculation point of view, time calculation depends on patterns. So if I am calculating now new pattern, let's say new pattern where the path is likely to be this one. So I have to first determine the path. What is happening? Okay, so if this is the potential pattern, let's say this is likely to be the potential path, let's say something like that. And let's say this is, if this is the path, then I can say that this consolidation should end somewhere in mid-May. And that's where we should see new high, or we can say, broadly speaking, by a month end, it should break above, right? Because there can be some delay here and there. Maybe this is not this much, but this is deeper, and that can add few days and so on. So usually what we do is we see the pattern. Based on the pattern, we try to depict a path, a probable path, and then based on the angle we decide, because deciding angle is very important. If you decide the angle this way, it's mid-May. If the angle changes to this much, then it is May end, you see that. And that So what we do is we do adjustment to the angle of the wave, not just for this local pattern, but even for higher time frame pattern as well. We do the same thing. That's trajectory of the uptrend, and the trajectory does change. It is not set. If there is a major pump, it changes the angle, and if there is major consolidation, it changes. And sometimes we have to average out and see, and that is visible on a weekly time frame. In a lower time frame, we don't see that angle. What we see is the local pattern. This local pattern is just for understanding. This is more about dissecting and see what is happening. This is not so important, to be honest. This is like a black box, as I mentioned earlier. It's just horizontal movement with little bit of slippage. And I think I mentioned earlier that when you have this low, and then in fact, few hours ago, um, I mean, before the major drop, there is another. So most of the stops would be in this region. Think about it. Most of the region stop, and when it hits, sometime there is, there are leverage positions and all. So you are going to see some slippage. So additional drop that you see, or I would say dip you see, is could be because of that slippage. In fact, in a previous consolidation, we had similar kind of pattern. You see that this was the low, another low, which is close, another low, but very close in the same vicinity, and another low, almost like, touch and go kind of situation. And then finally it dropped. But you see that then this is like market panicking, and then buyers come in. I think this particular V-shaped move is very similar we see here. Of course, it's not exactly the same, but behavior wise, it's very similar, because from the lows point of view, the behavior is very similar. Only difference is here it made higher high and then it retraced. So there is more like an angle. Here it's more like flat. I mean, same level, like horizontal peaks, I would say, or I would say there was no higher high, more like the same level, right? That's the only difference. Otherwise, the low behavior is similar in terms of lows. Now, this kind of bounces can be compared with this bounce, you see, right? And then consolidation and eventually breakout and then another leg. So whole entire thing is a leg. But while it is happening, you cannot figure out. Retrospectively, yes, we can say that. So similarly, this path is the path which is similar to this path, where we want to see, okay, this comes out and then here from it comes out and so on. Once it comes out, then it creates another leg up to 90K, 100K plus kind of level. And that's what we would like to see. And it seems like that's what it's heading. That's where it's heading, right? And anything changes, if there is any change, we have to detect those changes, and then, okay, we have to change the narrative. As long as it follows the pattern, the narrative doesn't change. Will still say, okay, 90K, 100K is the next level, right? What else? I think this is so. I think there are a lot of lessons in this one. The first lesson is, when BTC is upset, everything is upset. Like each and every coin is upset. And also go down even at a faster rate. So it is very important that understanding of BTC's phase is important. When the BTC shows good bounce, that's where new capital is added. Not financial advice, but best practices. One of the best practices. When it is near support, that's a risk sometime, but it's opportunity. But when there is some kind of quick drop and a quick bounce, so many people think that, oh, it's dropping, it's an opportunity because it's support. That's a mistake. The opportunity is not here. Opportunity is here in this region. Why? Because you see that it has stopped for 12 hours. There is some kind of consolidation, and then it starts making move. And people make some mistakes here. First of all, if they're online, I usually try to see how bad is the fall. If someone is offline, then there has to be protection, definitely. So firstly, they make mistake. First mistake, they don't put any protection. Stops are required, but one has to think about um, that if the stop is to protect the capital or protect the profit. In my point of view, letting go some profit is okay if it is not a critical. If this level is do or die kind of a level, then it makes sense. Otherwise, I would let some profit taken away because I'm not selling, and then wait for its reaction. I may not add if I have liquidity. I mean capital. I may add here. So depends on the situation. But even if I'm holding, not planning to buy, I would not just sell because this consolidation is broken. But let's say if I bought it here, then the equation changes because I have to protect my capital. Then I have to have stop. But even if one is stop, there is opportunity to get back in. So there is another mistake people do, that once they're stopped, they don't re-enter. Okay. So the idea is to re-enter, and sometimes you end up paying a little more, but that's fine. But you're back in the game. And sometimes you have to do a couple of times, not just once. But when you track at a higher time frame, that it's easier. If you go on a 15-minute, 1 hour, then it's going to be chaotic. But when you are on 12 hour, 1 day kind of a time frame, it gives you clarity that okay, now you know what, if I just change it to 1 day. Now, if I look at this one, okay, this is dropping, but this is a decent candle, and it is entering back. So this is where I can try. And of course, I have to put another stop here to make sure that okay, if this is not a real bounce, which we would not know, then I must get out here, right? So if I'm out here, fine. But then when I see that it is back, I re-enter. But then I must have my stop here as well. So in case it fails and goes down, I'm stopped. So of course I'm stopped here, but that's part of the game. You cannot do much about it. But in this case, it went up. So even if you are out, even if I'm out here, I'm back here right, and this move will again make my trade profitable in a way that there is not much of a loss. But when I'm here, I have to protect because you never know if this is a top, let's say, who knows, then because top is not realized here, top is not even realized here, it has to go down here. But as I mentioned many times, the first trade is very important. If one is not profitable, the tolerance has to be conservative. I mean, if I buy and then wait for 50% or 80% kind of a drop, and for whole entire bear cycle, it doesn't make sense to me. So I would rather, even if I enter here, which looks good for an example, but somehow it doesn't hold and break, if I'm getting out, I should be ready to get back in. When I do that, I might lose some fees or might lose some slippage and whatever little bit, but that's part of the game. At least you're in. And that's so that this is second mistake people generally do when they're inexperienced. And it's not that this is hourly, so even if you are in different time zone, you have enough time in 24 hours to decide on this one for so re-entry, having a stop and re-entry has to be understood well. And as I said, first scenario, when if I enter somewhere down, somewhere lower, I don't care. Yeah, this kind of a move will reduce my profit, but then I have more tolerance. And of course, even if one is profitable, one has to know that what level I must exit. And exit level can be multiple, not just one. And multiple exit level has benefit because sometime you reduce by 20%, and if it goes up, you re-enter with those 20% and not much of a loss. And so in that case, you are playing only with 20%. And if it makes another low, you reduce even further. Let's say get out 75%, I mean, reduced by 75%, and like 2, 3 stages you get out. Yes, your profit is, but then you cannot regret that, oh, I should have gotten out in the first place. Some people try to play on the both sides. They have to take one side and say, this is my plan and this is I'm going to stick to it. There is no scope of regression. I mean, you cannot regret. Once you decide, that is it. You have to execute it. You may change the plan, but not while it's happening, because when the price is falling, trader is not best of his or her mind, right? Because the situation involves a lot of emotion in that, so I don't recommend. So plan must be in place, and 2, 3 exit points make sense to me. One exit point, sometime whole, especially if the position is big, you have to think from tax point of view, that if there is a short-term gain, then you end up paying short-term gain for that tax year, and so on. So a lot of different aspects that you have to consider. If you have large position and the volume is not enough, then you might end up with slippage, and so on. So it's not always convenient to have single stop in my point of view. So multiple stop always makes sense. Anyways, so this is beautiful. One day is beautiful. What else I can say? So we just have to wait for it to break above this channel and follow this green path, and that's it. Today's call is going to be brief because there's not much. As I said, it broke, but you see, week hasn't ended. That matters. When you look at, and I keep on saying that, keep on monitoring this closing price. Very important. In fact, the closing price is higher than last week's closing price. The last week's closing price was this one, 60, close to 63. Now it is above 63, recently touched 64K. So it is in fact better than last week. You won't believe it. That's what happens. You feel that, oh, it has hit 57K. Fine, but week hasn't ended. And to surprise is to surprise to I mean surprising is, it is likely to end up closing higher than the last week. So even though the week was like full of pressure, anxiety, but it is likely to end better than the last week. And that's very, very dramatic for sure. But once you understand the game, that sometimes there is intraday movement, that is sometimes intra-week movement. So again, that's, if you are operating at one week, you're more relaxed, because this is a live example. On this whole entire move was intra-week move. Now, before this week ends, probabilistically, of course, I cannot say for sure. Today is Saturday. There's one more day to go. But looks like it's not going to crash 57K. It doesn't look like so. Anyway, so with that assumption, of course, that it is likely to, that's why I'm using the word likely, not like for sure, certainty with certainty. So likely to close above. And that's the funny part. And it's a lesson for those who are new to crypto. And even someone who is, experienced enough, but has gone through a lot of challenges during this tough time. It's a lesson that the closing price is higher than the last week's closing price. So there is a takeaway from this recent price action. Okay. When I hide all these drawings and just look at the chart, just simply forget we are expert TA, forget we are novice, forget. Just look at the chart. This is bottom. Okay, it's very hard to figure out for ordinary person to this is bottom. Fine. This is up. Opportunity, potential opportunity. Okay, this is very tricky. No breakdown. Good. Bounce, opportunity. Below this, risk. Very good. Then a move, new high, another opportunity. Right? So some people think, oh, I missed the bottom. Who cares? Even one has entered at 30K, that person is sitting on 63K level. Think about it. And sometimes if person becomes so greedy, we cannot help, right? But it is not expected to enter here. And of course, if someone enters, then beautiful. What I'm saying is, this is not a condition. This entry is the best entry, and then this is second best entry, and this is third best entry. Even third best entry is profitable. That's my point. So even so much of price action here, so much of lot of like so many Fed meetings, so many like war, Middle East war, or so many bad news here and there. See, like exchanges related or some major names related, some scams and so on, everything, all so many things happen. But when you look at the chart says it doesn't matter to me. It had this leg up and then consolidation and second leg up and consolidation, as simple as that. So sometimes we have to look at this closing price to clear a head. If there is any doubt, clear our head and try to see, just look at weekly. Don't use any indicator, don't use any drawing, just look at the closing price. Use your common sense. Don't try to be a TA, expert TA, and logically see what it's telling you. Sometimes you know what, the common sense prevails. You won't believe. So to me, this when I look at this, I don't need to be TA to tell there is no risk. Right? When it starts approaching below this midway, then it's a point of concern. Let's say 50K is broken, then it's a real concern, right? But you know that even if that happens, even if this is at 40K, it can survive. But yeah, of course, below 40K is a big deal, and below 30K is doomsday. You know, 25, 30K kind of doomsday means it's not. So 50K, 40K, 30K. So a lot of safety nets in between. And then people talk about tops and all. Totally unrealistic. Totally unrealistic. Probabilistically, I mean, technically speaking, unrealistic. I mean, I think I covered this topic about perspective and all in last week. Last week I covered a lot. Um, so this week I don't have to repeat them. But now we see the bounce. We were under pressure last week, until day before yesterday, I would say, and now much relaxed because it's close to 64K. But the thing is, I'm reiterating few things to review ourselves, actually, to retrospect ourselves, to see how we behave. Market behave in one way, but how we behave is very important. Okay, we analyzing market, of course TA would do it, but trader has to analyze his or her own behavior, in my point of view, after major pump and major dump. Self review, retrospective, introspection, whatever way you want to do, but that is needed to see that, was I did I lose my control? Did I forget my rules? Did I start thinking something which was not the game plan? And if you see that you have deviated from the best practices that you have in your mind, then add that as a lesson learned, that it doesn't happen next time. So market, we are analyzing market price action right now, but individually, everybody, I insist that everybody should introspect, retrospect, and see how I behave with respect to market movement. Because next time you will do better when you do it. And when you do it, you are very honest because you are not supposed to share with anyone. But when you do it honestly with yourself, right, then there is a big learning. I mean, And I think I highly recommend people do it. Nothing wrong about it. Even if someone has made mistake. But these are the times where it's time to check how am I getting better as a trader, as an investor in crypto market? And that question, answer of that question will tell you more, and then I mean will be better next time. Okay, so this is beautiful. Should I? So of course we need more, as which I covered. This is not enough, but not a concern at this moment. We should look at DXY. So DXY, I so this is peak, right? I mean, last time we highlighted that this is so we would like to see it follows the blue path. Now again, maybe I'll extend up to this because this is a checkpoint and it might go down like this. And maybe I'll add another scenario that I think it followed this properly, a little higher in this case. Yeah, I should have different color. This color is not so visible. So this is another checkpoint. Like so, if it breaks below 100 and 1 or 2, then that would be lovely. I mean, we would like it to land on this white line, which is a trend line. We'll see. But even if this duration is good enough, like whole entire May, we'll see pump. If it bounces, then in June we'll see some kind of downside or correction, which could be 100K at 100K, and then we'll see. But I think let's think from a month point of view, which is good enough. Why nobody knows beyond 1 month. 1 month is even good enough in my point of view. So in this month, we would like it to come down and then react and see next. So that's an expectation. Okay, what else? The yields are coming down, which is good. See, a little higher it went, oh, fine. Major. This is not happening at this moment, right? So I'll remove it because this is good red candle. We'll add we'll add if required. For now, this is the path. Maybe the angle is a little different. Again, this is just for reference. DXY is more important. Yields are just for reference, very important. But yeah, this is good news. DXY is good news. Let's look at dominance, Bitcoin dominance. The Bitcoin dominance is this is bouncing, but I still believe that the pressure is still on. This is a channel that I added. If it goes up, then it's bad news for alts. Most of the alts, some of the alts could do well, but then we'll see. Yeah. So I think this could go down, but it is not at a level where we can say this trend will break down. There's a rounding top I talked about, but rounding top fails only if this level is broken. This is very early to say that this rounding top will, become a reality. I mean, ultimately, rounding top. This is indication, not confirmation. In short, yeah. So we 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 would like to see which side it breaks. We have boundary. This boundary. This is the boundary. This is the boundary. Right. So right, it's near, right in the middle, so to speak. So we have to see in which direction it goes. So it's in conclusion at this moment. That means the BTC is still maintaining dominance. In short, let's look at our all our swing coins. So now APT started moving up, not a major pump, but it's okay, decent one, indicating that now it doesn't want to go down. So I think we just just consider that. I mean, consider that as a clue that it wants to go up. BCH, nice looking bounce. Didn't close below. It did break below, but it before the weekends it's up. So this, I mean, it's same as last week. This was the closing and it's almost there. So we can say there is no net change. I mean, there's no change. I don't think so. Yeah. BSV is having nice 4% pump and it is similar to BCH. I want to keep all three, folks. I mean, there is something, there is something I'm still anticipating. I don't know the future, but I think I would like to continue with these two flavors. Doge is in real good mood. Look at that. It bounced off this support. Beautiful. And look at the candle. Wow, beautiful. 13%. This is a crazy coin. This is crazy coin. Back to its consolidation level. Amazing move. Can you do? I mean, what can we say? This is also nice looking bounce. ETH. So it's again same thing. It did try to break, let's say third time, but it's staying above the R4. FET, nice looking consolidation. No major pump, but that's all right. Looking positive. FIL is bouncing too off this support, which is good. Again, this is not the strongest one. Right now, this is one of the weakest one, but we're keeping it because we want to see how it behaves above 11 or 12. That's why. FTM bouncing, it's flat, like a couple of other coins we have seen. INJ, similar category, more or less at the same level, and it could improve. But yeah, I mean, this is like it's consolidating near support. It's not really broken. Okay, so this is KS, same story, no new low, which is good. Huge consolidation. The whole entire thing is consolidation, and but it is at angle. That's why I shown with the orange block. So it is still within the consolidation range. Link has landed on this one, right? This is a head, but there's no right shoulder. I might have seen so many times that right shoulder doesn't complete and then it goes straight up. So if anyone is saying this is head and shoulder, he's wrong, she wrong. I mean, it's premature to call out. We cannot say. We can say it might. That's why we had this and we had this, but I don't have the another arch. I cannot. If if it let's say goes up and start going down next because of this long pattern, then I would add then. But then also that's I would just add an arch. Sometime even from the neckline it goes up, right? But if it breaks below neckline, then it's gone. That's for sure. Then it goes deep. So right now it's we cannot say this is head and shoulder, but if it breaks below head neckline, then it's bad, really bad. Our India up by 5% and looking strong as you can see above R3 didn't break R3 going up. So we're expecting recovery and new high. Rune is also doing the same thing. Right now it is so my arrow is not like this. Remember, my arrow is something like this, which is indicating that angle could be little steeper like this. But I have stopped my arrow like this to indicate that it might touch here, some kind of retracement, and then shoots up. But yeah, I mean, if I extend this, but I cannot extend this, it doesn't make sense. The head and shoulder, I don't want to wake up. No, it's not. SOL, nice looking bounce, isn't it? Again, it broke this yellow box, but not quite closing. So it's not closing, so it's not broken, technically speaking. So yeah, it's heading up. Nice. TIA, I think TIA ending the drop. So this was the capitulation, like final nail, so to speak. This one hitting R1. Remember, prior resistance is support. So support. So if somebody has this chart and say it's touching and then they see bouncing on a 1 day like this. So when it touches another touch and then bounce, so it tells you that it's offering. In fact, this offering opportunity that way. So right now it is now because this is another resistance, right? But the whatever resistance was broken earlier, now the same is applied. It's the same thing. So it's like you're a climber and then you fall off the cliff, but you are hanging. You got a support, and you are kind of climbing back. So all the hurdles that you had passed, you have to kind of redo it. So that's how it is. So that's why it has to come come up to, I mean, it has to reach this level for it to pump higher. So far so good. So I consider this also as opportunity. So with that note, I think I covered everything. And last week I had to cover in detail because the Twitter, social media, like everything was like panicking and bad news here and there, and a lot of major influencers were bearish and all. So it was much natural that I had to cover, and I covered all the cycles and a higher time frame. So if you missed the last month, you refer that. And this week, as I mentioned, because it's bouncing, everything is bouncing up. I don't have to talk much about it. And the bounce is not just ordinary bounce, it's a good, decent bounce. So I think we are back in the game, so to speak. But technically, we would like BTC to break above 67,500. Conservative level is 69,000. If it can close a daily close above that is good enough. I would not say weekly close. Weekly close is another conservative level, that if weekly close about 69, kind of certain probabilistically. Uh, so that's my summary. So yeah, I think we are waiting for 90K, 100K. There's one milestone coming up, by the way, 15th of May, which is CPI. So that's another checkpoint. Remember, so whatever I said is based on the current situation. If there is an unforeseen event, let's say CPI is above 4%, something crazy, then the market will react negatively. Okay, I'm telling you upfront, 15th of May. But we have time. So what might happen that this price might move maybe very close to all-time high for Bitcoin, let's say, very close to. And 15 May is a surprise, let's say, from let's say bad news. But still, we have time. Because if we have seen 57K, it takes time for it to retrace from, let's say if it goes near 67, 68K by 15th of May, the conservative. Still, we have time. Think about it. Okay? And you have still time from 4th of May until 15th of May to prepare. Right. So and 15th May, if the CPI is good, then there is going to be like booster rocket, like it is going to blast off like anything. That's my hunch because it's based on macroeconomic. I mean, everything is related to inflation at this moment. I've been saying this consistently that forget about fundamentals of crypto. Crypto fundamental do not matter. They do not create cycle, and you are seeing the evidence here. Major factors, the macroeconomic factor reasons could be different. COVID was the reason why there was a major drop. Interest rates hike, fund rate hike was the major reasons for 2020. So you see, the reasons could be different, but reasons, if the reason is big, then it affects. Remember, the war in Ukraine didn't affect much. War in Middle East is not affected. So think about, these are serious events, but not all serious events impact price negatively. That's why it's very important that we track news. But I do not track, but I'm saying non-TA who track news, they need to make sure that they have to also calibrate and I would say weigh the impact and assess the impact and see if there is real impact. It's very tough job in my point of view, and in a lot of inaccuracy in that. I don't know how many of them could really do it because there's so many factors globally. How can you, and it's a tug of war. Let's say, think about it. If there are 20 people on the left side and if 20 people on the right side, first of all, you have to assess the impact or the strength of each of them, and collectively, and so many other factors, and the net result is the movement of that direction. And so it's extremely hard. And if you miss, if and somebody is like, you think it the left hand side is 20 people, but actually there are 25, then your calculation go out of, go for nothing, because you missed out the parameter, you missed out the input parameter. So that's what happens in fundamental analysis, that if you miss out parameter, you are wrong. If you weigh them incorrectly, you are wrong. If you are not updating the weightage while the event is on, or event is happening, then you're gone. And sometimes the output becomes the input, then you are not considering that you gone, and so on. So there are so many ways, and TAs are very 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 in a way, TA, we don't care about all the input, whether there are 20 people or 25 people, 20 people or 20,000 people, we don't care. We just care that they're fighting fine. Our focus is rope, that the rope's midpoint with respect, rope's position with respect to the midline. If the rope is on the moving on the right side or left side, depends, right? We assess where, what is the threshold where we can say the what is the probability of one side to win. It is as simple. We don't care, we don't even look, we don't need to look at the people who are pulling the rope. If you visualize, you'll understand what I'm trying to say. That's the basic difference. The fundamental analysts do not look at the rope. The fundamental analysts look at the people on the left and right side. Technical analysis just look at the probe, and that is enough for us to figure it out. We don't care. Okay, if it is moving on the right side, we think that, okay, that means the right hand side people or group of people are stronger, right? Simple. So similarly, whether the price goes up or down, we will just simply assume that the upside, if it's going upside, means the upside, people who believe in upside are more. Now, if you want to dissect and find out what was the contributing factor, you can always do it. That technical analysis cannot provide it. But if your intention is to make money, you don't need to do all this. That's my experience, I would say, not even hypothesis. And that's why the focus is on the midline and the rope, not the people who are on the left or right. I'm telling you, and that makes life so, trading so easy, trading, investing so easy. But yeah, it's not as easy as watching, and rope assessment is important. The levels are important, because the only trick in the TA is it's not the midline. Midline is not fixed. So when you watch tug of war, the midline is fixed. You can figure out where the rope with respect to the midline. Here, the midline is not fixed. Sometimes it's floating. And that you have to find out. And that's the key. And that is nothing. That floating midline is the critical level in terms of support. So it's not set in stone. Sometimes the critical support is floating. You have to adjust it time by time. That's it. So that if you can nail it, you can nail the trend analysis. But that's a tough cookie to crack for sure. So I'm not trying to oversimplify TA, but I'm trying to say that it is it is easier once you master that, finding those levels. Anyway, so I think that's it. I hope you find this session useful. We'll talk more on chat if there's any question. Thanks, everyone.